high yield savings account, taking a look at crypto, also taking a look at the plethora of offerings that seem to be seeping into the financial markets. And I think this might be a good one for you guys if you are looking to earn some cash without any risk. Let's talk about that today. My name is Paul Barrow. Welcome back into Tech Path. We're going to get into it and really break down some of the savings accounts that are out there. We'll take a look at some of the crypto platforms you can utilize for high yield interest and yield accounts coming back to you. And also take a look at some of the moves in the market that is happening right now that could affect banking overall. So we'll dive in pretty deep on this. Let's thank our sponsor today, and that is iTrust Capital. If you guys are looking at going in and doing a simple IRA and using crypto to do it, iTrust Capital is the place. Now, they actually have the ability to go in and use gold, silver, as well as a ton of other assets. You can either use your existing IRA, transfer it over, you can start a new one, or you can roll over things like your 401k, TSPs, your 403b, etc. All of that's available over at iTrust Capital. They do a phenomenal job, have been a longtime partner of our channel. So make sure and check them out. All you have to do is just click the link down below. All right, so let's get into a few things here. And I want to jump over to just the headline here, pretty straightforward from the Wall Street Journal coming in. Banks are finally facing pressure to pay depositors more. And I think you guys know the game. Right now, we have seen over the past decade, banks paying almost zero on, in many cases, just fractions of a percent. All of that seems to have changed here recently. And the reason really has been boiling down to the fact that we've seen the fastest interest rate rise in really the last 40 years almost. And I think this is the factor that really starts to play into how you should be looking at creating a strategy in your financial deck and your stack of how you're going to go out and earn money without, assessing too much risk. Now, of course, you guys know we talk about crypto here a lot, but there's also a lot of other opportunities here. Getting into a couple of things here. This is a good example. In the 2-month Treasury Bills, yields jumped, as well as debt ceiling and rate hikes are now in focus. The Treasury said it could reach its mandated $31.4 trillion borrowing limit as early as June. The ceiling was back in focus on Tuesday. This is just here recently. On tax day, when individual tax returns are due. Maybe there's some factors there. Obviously, there will be an influx of cash coming in with people paying their tax bills. That in itself, I think, is one that may affect how we see T-bills overall. If you guys are looking at using T-bills, though, what I would recommend, there's many ways you can do it. You can go into banks and do this. You can go into, platforms like an E-Trade, or even going into something like Fidelity. But there's some opportunities here with Treasury Direct where you can actually go into the federal government and actually purchase your T-bills. So just as an example, these are some of the ones that are available right now. You've got 4, 8, 13, 17, 26, and 52 weeks available. Minimum purchase only $100. So this is another way for you to earn. Right now, T-bills ranging between around 4.8 and up. We're seeing more of that playing out also. Overall, I think is going to be the question of how long this holds, because right now is the time. It's like kind of now or never of being able to get into some of these short-term assets that are highly liquid and able to pull back a 4+% return for you. So think about that, because if you are sitting on cash or US dollars and you're thinking, well, I want to keep it active, so in case I get a chance to buy Bitcoin at 25 or somewhere like that, or I get a chance to buy ETH on a dip, and we'll take a look quickly at Ethereum and Bitcoin towards the end of the show, this might be the opportunity to be able to gain a little bit of upside without going into too much in terms of a long-term commitment. If you look at the 3-month Treasury bill, this is a secondary market rate right now, and I went back, all the way to 1954. You can kind of see we're starting to see some pretty interesting performance right now, right there at 4.88. 506 right now, if you look at the overall market on the move right now. The last time we saw these kinds of numbers, of course, right here in September of 1981 was the highest. The area right here, of course, in 06, which was right before what we saw in 2007 and 8, which was the financial crisis and the adjustment of the savings loan crisis. That's where the downturn, of course, hit. If you look at this overall, let me kind of zoom in on these two zones right here, because this right here is where I feel like we are right now. So if you lock these in, if you do go into long-term, whether it's a CD, a bond, a treasury bill, there are some options here where you could lock some interest rates in for a period of time if you don't need that liquid capital. So remember, when you lock these in, even on these short-term CDs like 1 year or 7-month CDs, that's good for that period of time, and you've gained that interest. Of course, interest is taxable, so just be aware. All right, so let me jump over to the best CD rates currently. This is April 2023 as we record this. There's a few out there. You're going to recognize some of these names. Marcus is out there right now. This is a Goldman Sachs product paying 5.5. This is a 10-month term. Minimum deposit 500. You guys can kind of see that, but I'm doing this for the podcast audience who's listening in. BMO Harris, this is the other one, 5.1, $1,000 deposit and a 1-year term. Not bad. Forbright, don't know these guys as much, not as in the forefront, but also at 5.1, and then Alliant US Bank coming in at a 4.5 and a 4.4 on a 7 and 11, respectively. And then you get into some of the other banks out there, and then we'll go into banks that you probably recognize, which are Wells Fargo, Chase, Bank of America. Absolutely dismal. 1.5 at Wells Fargo, $2,500 minimum deposit on these. And then you get into Bank of America, and that's at 0.03. This is where it gets ridiculous. So I think we're going to start to see mainstream banks have to push it up. Now, there's been a lot of scenarios that have played into the financial markets recently, and I'll talk about that and why there may be pressure on the banks. And this also comes from what's happening in the crypto markets, because I do think there's going to be enough. But remember, the crypto market's a very small sliver of where most Americans and even expats are working their money. In other words, putting it in and getting that money to go to work for them. This came over from Kate Investments, Fidelity's money market fund. Their SPAX yield 4.48 and 4.06 after fees, which they're making a killing on this. But right now, if you are in Fidelity, remember you can get Bitcoin and Ethereum and hold it in there. You can't move it yet. You can buy and sell. And while that money is sitting on the side, don't just set it in a USD. They're going to put it into a SPAX, which obviously is the money market yield fund. So that's another one right there from Fidelity. Then you go into this list of money market and mutual fund, Bonanza. This is upset the typical fund flow. And if you look at Vanguard, a mere 6th place. And they used to be one of the top performers out there. And if you look at just the kind of the rundown here, Fidelity out in front, JP Morgan doing pretty decently, and then you even go into UBS, who's been significant in terms of inflows or percentage, I should say, of total. But if you look at the inflow, Fidelity is taking pretty much the lion's share right now. Now, Morgan is probably going to see some lift, I think, but the one that I think might be further up on the market here coming soon is going to be Goldman Sachs, and there's some reasons for that because of their partnership with Apple. I have some things to say about Apple. Stick around for that because it's going to be interesting, I think, going forward. Some of the other online banks that are out there, Ally is one that I've had experience with. I think these guys are offering right now I think it's a 3.9 or 3.7 on the regular savings accounts, which are active and you can move them and they're very liquid. But a 4.25 right now on their no penalty CD. So not bad, 4.25. If you have an Ally account. I'd love to know which banks you guys are using and or entities that you're using to gain your highest yields. We'll show some yields on Ethereum, show some yields on Solana, because this might surprise you if you really want to take a look at long-term and you're a crypto head looking at long-term investment on especially platforms like Solana and Ethereum. Further into this is average CD rates from 84 to 2023. There's a little bit of this movement right here that we're seeing. And I think this is the kind of jump. If you go back all the way back into here, this is 2004. This was right after the dot bomb. Remember that, guys? All right. This was pre-1999. We hit that right there, 5%. The eclipse of the dot bomb era, and then bam, dot bomb occurred. We saw 17 trillion move off of the S&P, absolute destruction in the market. And look how long it took for that to recover. All the way into 2003, now the CDs were paying less than 0.1%. Then you moved back into 2007. So that was another 4 years that it took us to get back up to this 349. and then all the way back down into here in 2014, and all in this dead zone of growth. Remember, because this was when real capital growth was occurring both in the S&P, so assets were at work versus sitting on the sideline, what we're seeing right now. And this is typically what happens when we start to see the eclipse right before a recession. And that's the thing that you have to be aware of. So if you do lock in, be aware of two things. If you're locking into something long term, and this is not financial advice, but this is what I do. If you're locking into something long term, it needs to be assets that you can allow it to lock in long term. If you have any exposure of liquidity that you need to be available to, then you need to think that through, because if we do see a big fall off on a recession and we start seeing a retracement of interest rates, money cost is going to go down dramatically, and that will change things very, very much in terms of society. And that might also put some pressure on you in terms of inflationary scenarios that might play into your household. So just be aware of liquidity if you need to have that available. If you're sitting on a nice sum of money and you can lock it up for a year and never worry about it, then you're in the right place at the right time. In fact, I'd love to hear your story. Let me know in the comments below what has made you get into that kind of financial freedom, and what were some of the tricks you were using. Another thing I wanted to take a look at, this right here is historical CD rates. This is 67 to 22. There's a chart here I want to show you right here. All right, so you can kind of see what they've done. And look at the rates we were getting back in 1980. Remember, this was right there at the eclipse of the last major recession that the United States had, was 1980. And we saw this massive fall off all the way into 1988 and early 1990 before we saw a lift back down to almost 10% on the 3D CD rate, which was amazing. And then it's just been trailing downward until now, which we're actually in the 5% range again. And we may see a little bit of an upside here for months, possibly maybe up to a year, before we see a recession or some sort of reverse on the market where money starts to come down. Remember, a lot of this depends on the FOMC and what the Fed's going to do. Compare the best savings accounts, quick run. Marcus Lending Club, the ones I would go with, I mean, if it's just savings alone, you can get Marcus in at 3.9. I noticed they didn't have Ally in here. CIT coming in at 4.75. By far the best one I've seen, but it does require a minimum $5,000 balance. So that's the only probably holdback for a lot of people. And then beyond that, I think the other one that you could go into, I would recommend, actually the one I would look at is Ally, because they do have one that's in the 3, kind of in this minimum of 0 and around a 3.9 or a 3.7 on flexible savings, meaning it's very liquid. It can go in and out of checking accounts, things of that nature. All right, the other one that you need to look at, this is one of our top companies that we had on our watch list at the beginning of the year. They had a little bit of a misstep, full disclosure. They restructured a little bit. It was a situation with them on their crypto capability of onboarding and offboarding. But one thing they do have is 5% on your cash deposits, and you're going to get 5% cash back as well. So there's some benefits here, and this is an FDIC insured platform, Juno. So I'm very interested in how this one may end up performing. I'd love to know if you guys have actually used Juno. We have some of the guys in the crypto pit that are using this. So far, they like it. And this is a good one, not bad. And it's got some ability to move in and out of some crypto assets as well. So there's some uniqueness to that one versus some of the other ones. Now, the big one, probably the biggest news of the week, is Apple. Apple drops literally a bomb into the system, and they're now paying 4.15% interest on a savings account. This is just a quick review of how it sets up. If you're an Apple card holder, a credit card holder, you have the Apple little titanium card, you have this now. It's in your system. I would say that you're going to have to update your iOS to make sure that you've got the new savings account feature. You can transfer directly from banks. So if you've got banks that are not getting yields, we're seeing a lot of outflow coming into Apple. Apple, I think, is in a position right now to do some serious damage on the financial market in a bad way, I think. Banks, and because of the integration of Apple Pay, in-app purchases, and the amount of penetration that they have, I foresee and predict that Apple will make this available to any Apple ID wallet holder. What I mean by that, if you have an Apple ID, meaning you have a phone, and you're downloading apps, your wallet is there. So you can put any credit card in there, all that. You know how those work if you're an Apple user. I think it's coming, guys. I think you will not have to be an Apple credit card holder very long, and we'll see Apple see a massive amount of interest, or excuse me, onboarding, and especially if they continue to hold this 4.15. Now, how are they doing this? They're basically going out and grabbing T-bills and other aspects through Goldman Sachs, and which is their partner for the credit card. And they're basically getting a sliver off of that. And if you think about that, I mean, this is massive. Just to give you an example, here's the iPhone stats. This is 2023, all right? 1.5 billion active iPhone users worldwide, 2.24 billion iPhone units sold to date, 153 million iPhones sold in the first 3 quarters of 2022. That was one of their biggest years yet. So there's 2 things that are happening with Apple. And there's another fact in there I want to showcase here in a second, but I want to get to this point. 2 things happening with Apple right now. You have what potentially could be slowing device sales. You have scenarios playing into these markets, meaning the App Store, that things like GDPR, what's happening in Europe, a lot of pressure on Apple to allow sideloading and other features, which is going to give them less and less lock on the App Store, meaning they got to open up, which means they need a new vehicle for a cash cow. This is the perfect cash cow in terms of creating a full financial suite of services, including apps. This is all going to tie into your wallet. This will be possibly the perfect way, think about this, to roll out a digital dollar. And what I mean by that is if we get into a CBDC, Apple, I mean, come on, they're in with the deep state as much as anybody. There is an easy connection to reach 1.5 billion users on the planet, probably 70% of the Americans have been able to do that. And you start to see use case scenario playing into this with Apple Pay and so many integrations, which I've seen an unlimited amount of integrations right now. And the trust factor alone is going to be huge. So watch out for Apple. This one is coming. Now, the thing that could happen, this is a crazy one, they could flip on crypto. What I mean by that is actually decide we need to be able to do something with it and integrate it into the Apple ecosystem. Question will be is how they do that. Do they create their own token? Do they do something like it, much like what Amazon might be going to? Also, the valuation of that, what that could be in terms of value against that. They'd easily be able to get a bank charter, if not most likely just buy a bank, and be able to do this. I think the fact that they could do this in partnership with Goldman Sachs, there's going to be a lot of opportunity here for sure. Other aspects I want you to think about is Elon's kind of the do-it-all everything app, X.com. Recently just filed a supplement to their change of organization documents where they're going to rebrand and most likely see Twitter.com and many other aspects of where his vision is for financial services, messaging services. And let me kind of paint this out for you. X.com is going to be, I think, maybe if you think about what's happened in WhatsApp and other aspects worldwide and many other countries who have these all-in-one, Alipay, etc., that have all integrations, payment, messaging, communication, social media, all those aspects. And if you tie in crypto, which they've already started to put their toe in the water with eToro, all right, maybe you've got something in terms of super app for what he's talking about here. And a bird has been under his saddle for a while. And if you guys know what that means, it's a Western term. He's irritated. He's been irritated in the sense that PayPal was able to do some of the things. He actually ended up buying X.com from PayPal back because that was his original vision, I think, for PayPal when the PayPal mafia was joined, Sachs, Musk, and the team over there. Where does this go for Elon? This, I think, is a very interesting time for Elon because he's already showed a little bit of a step back, but I just want to be cautious about what Elon is doing. And remember, sometimes your friends are your foes and your foes are your friends. This is something you need to be aware of as you're treading into social and integrating yourself into these platforms. Understand the risks, understand the exposure, and just be aware of what's happening out there, guys, which is why you watch our show. Hopefully, this is one of the reasons you come to TechPath and PBN. But I like it in the sense that I think there might be some intriguing elements that will improve the overall aspect of technology and how people might be self-sovereign at some point. We'll see if CBDC changes that, but I still believe Bitcoin and digital assets will change that. All right, last but not least, Robinhood, 4.4 APY on your uninvested cash. It's a pretty simple thing. I will say you have to pay them $5 a month for gold to be able to get the 4.4. The other aspect with Robinhood is, in my opinion, I will tell you that I have de-risked off of Robinhood only because of their banking partners. If you look at the banking partners, and I know they have a bunch, but I look at the banking partners, I don't necessarily see a Goldman Sachs in there like I do with, and I'm willing to go over to, say, an Apple for a savings account because essentially that's it. Now, the other aspect, if you're a trader, Robinhood's great because you've got your cash sitting in there earning 4.4 and then you want to deploy real quick. You don't have to move money in, but most of the time you can get instant trade value anyway, and it's pretty instantaneous with being able to transfer it from your bank, even if you're just moving it, out of a savings account into your checking and then into Robinhood. So, from my opinion, is that I have moved away from Robinhood. There are many reasons. Probably the biggest reason overall is their $5,000 daily crypto limit. What I mean by that is if you buy crypto, you cannot move it out more than $5,000 a day. I don't know that's a big problem for most people, but it was a problem that I just did not like. All right, so let's get into Bitcoin. This could be the answer for spiraling debt. Now, this is a big statement, but there's a couple of points they make here I want to kind of highlight right here, just in terms of performance. This shows kind of the documents down on U.S. debt ceiling was reached during Bitcoin's history and the performance. Not a lot here in terms of performance of how Bitcoin did after a debt ceiling was released. This whole point of Bitcoin as an ultimate reserve, co-reserve asset, which I think in the future, we will have multiple reserve assets worldwide. I think most likely the yuan will become a reserve asset. The dollar will take a while, but it will not have the dominance. And I think we'll have a digital asset as well that will become a reserve asset that many countries and many sovereign nations will begin to start to integrate more and more. So it's just a matter of time before I think Bitcoin gets in there and changes the game. Headline right here, Bitcoin price can soar above 25. I kind of want to just hit the debt ceiling topic here. The fiscal cliff is a complicated dance and it could thwart the Fed's quantitative tightening efforts. This is a problem when the Fed basically hits a ceiling on how much money, they need more money into the liquid or into the budget, and that has to occur. This is something that Chair Powell talks about all the time, where this ceiling is going, and that Congress has to pull the trigger on this. So note how the TGA spiked in 2020 as the Fed grew its balance sheet from 3.7 to 8.9 trillion. Then the Treasury drew down its TGA balance right there. And when you look at that to pay for the stimulus bill. So this could be a repeat, which again poses a threat to the aspect of quantitative tightening. Let's further look into this. I want to go over to Ethereum because this is another aspect. Now, if you're a little bit more risky, but you're also thinking long term, this is the way that I play it. Now that we've got basically the capability of liquid staking and drawing in and out, withdrawals, all that aspect, freedom of flow of capital in and out of Ethereum right here over on Lido, 4.6 right now, liquid staking, no minimum, in and out, beautiful. If you're an Ethereum believer, this is as good as any bank. Now, the difference is if Ethereum goes up to $3,000, you're compounding growth on your capital asset, but you're also compounding interest at the same time. So it has the double wonder of being able to asset grow as well as grow in value based on the interest that you're gaining. You don't get that in the US dollar. The US dollar is 1-to-1. It's like staking USDC and you might get 4%, 5%. That's another thing that I think we'll see a lot more of is digital stablecoins coming into the play a lot faster and probably being used in some of these banking institutions as the liquid for being able to essentially go in and grab a CD against it or other long-term, potential holds on that. So lots happening. USDC, and I think will be the winner there when it comes at least to the Western markets. Tether, I don't think we're going to see any kind of movement here. This, of course, is the current dashboard over on Ethereum in terms of the withdrawals. We are seeing a little bit of a withdrawal coming in, but if you kind of scan down further, into the sheet. Actually, I think we've got another chart right here on the Nansen. Yeah, this shows it. This kind of just shows you the withdrawals right there in that light teal, or I'm sorry, deposits, and then the gold is the withdrawal. So since the occurrence, this has been fading off, not bad. Rewards holding and deposits versus withdrawals starting to stabilize. So again, this gets back to the point of, does withdrawals cause a problem for the ETH price volatility? I think the ETH price volatility right now is being adjusted due to other aspects in the market. In fact, the question mark right now is this flight of capital, and I talk about this all the time. Flight of capital going into other alternatives other than traditional banks, such as the savings, creative T-bill usage, bonds, CDs, and then now even into things like crypto, especially around Ethereum. Another one is Solana. Solana right now has the ability to do some pretty insane staking. And if you're using the Solana app and their wallet, Phantom, let me know. Drop some comments down below. And if you are a lover of Solana right now, hit the like button and jump in. There's a lot happening there. Liquid staking over on Solana at 6.5% over on Lido. Again, not a bad deal. Very good if you believe Solana is going to be a long-term asset for you. So again, same kind of scenario with ETH. Liquid in and out, very easy to use and do. And it pays you both on holding your Solana as well as investing if you're gaining on Solana as well. A lot of validators right here. So there's a ton of opportunity here for you guys to go in and do your own research on validator metrics. Just make sure you're getting into some of the best and most trusted ones. Here's some examples of ones for Miami right here. It shows you can go in and drop into the data center. Shows you the skipped vote. It looks at trust value, all sorts of things in terms of general aspects of quality of these validators. So if you are doing that, make sure and do a little extra research. Here's kind of the StakeView Solana validator performance rankings. This goes into all the big ones, Stakehouse, of course, being the top, 7.76 currently on APY, but Chive coming in at 7.76 right there as well. And then Blocksmith and others. Point being here, guys, short term is this is the time, if you're looking at a lot of sideline cash, this is the time to really get some gains that are very passive and low risk. That's the issue. Are we dealing with a low risk period before we see some volatility shake out in Bitcoin and Ethereum, which could cause some shakes over in the altcoin market? Love to get your feedback. Always love to understand how you guys are playing the game out there, and make sure and drop some comments down below. If you're not in the Diamond Circle, get in. It's really easy. Just join the link down below. It is super cool. You'll get our Substack, a lot of additional content. I drop additional podcasts over there, even do interviews over there that we don't put on the YouTube channel, so it's pretty cool. Check that out. And of course, if you want to catch me, it's out on Twitter, @PaulBaron. Catch you next time right here on TechPath.